Hello, hello. Welcome to the March Mortgage Market Update. So let's give you a quick update of what has happened since our last video back in February. So at the end of February, we actually saw a spike in price reductions on homes. Yes, people were actually lowering the prices of their homes to try to get them to sell. Why were they doing this? They were doing this because interest rates at the end of February had pushed 7% again, even over 7%. And that is why it slowed down the housing market a little bit and why people had to go into price reductions to sell their homes. But when this happens, this is a good time for if you've been looking for a house for a while and haven't been able to get one under contract, this is the times when you want to try to get that house. You might be able to get a little bit of seller's assistance, or you might be able to get that home inspection in that you wanted to. So make sure you take advantage of it when it happens. Now, since March has hit, rates have gotten a little bit better. So that's the good news. And you can tell because spring has sprung, the housing market is definitely picking up. It's hitting earlier in the Northeast than it normally does. And I can tell you that our phones have been ringing off the hook with leads calling in for pre-approvals. Our pre-approvals have skyrocketed the past 3 weeks. So just keep that in mind that people are out there looking now. So with that, what's going on with rates? There has been, and this has been going on for a couple of months now, any auctions that are happening, anytime the government is selling off money, it could be treasury bonds, it could be mortgage-backed securities. They do different auctions throughout the month to get stuff off their balance sheets. And every one of them is being met with below average demand. And when this happens, it's pushing interest rates higher. So that's why you're not seeing a reduction in rates, is because of things like the auctions. They're flooding the market and you're not getting a whole bunch of, you're not getting the demand there to buy it. So when there's not demand, prices rise. And then you also have consumer price index. Consumer price index came out yesterday and it came out higher than expected. We actually increased inflation from 3.1% to 3.2%. Now, the bond market did see a hit for this as well. So yesterday, mortgage rates did not get better. They actually got slightly worse, and just ever so slightly, because inflation is not under control. We're certainly not down to that 2% level that the Fed wants us to be at. And the problem is, I don't see how you're going to get down to 2% the rest of the year. The way CPI is made up is you add up the most recent 12-month monthly inflation numbers. And the thing is, when we do this, we're not going to be dropping off any large numbers for the next foreseeable future. They're all lower numbers. So you add you may add 0.4, but you're dropping off a 0.4 or you're dropping off a 0.3. So it's not going to bring down inflation anytime soon. As I said, the spring market has sprung and we are now seeing bidding wars. So just keep in mind, especially in the different price ranges, if you are anywhere from 200 to 400,000, those price ranges, it's very hot. It's very active. People want houses, expect to pay above asking for those houses, expect to probably have to waive inspections to get them under contract. I do want to point out the NFIB Small Business Optimization Index came out, and small businesses they're starting to have a little bit of fear. It dropped again. We're now down to 89.9%, which is the lowest level that this index has been in 9 months. The big thing is they're not hiring. They're a little bit worried about the future and the economy and what's going on. And to put this into perspective, this index has been, the 50-year average of it is 98, and we're at 89.9. So we're 10 points or 8 points below the average, and almost to the lowest it's ever been, which was in 2013. And now the question that everybody is asking for, when is the Fed going to cut rates? Well, not anytime soon. I hate to tell you that. Definitely not happening at the March meeting, very unlikely at the April-May meeting, and it's probably a flip of a coin at the June meeting at this point. Inflation's not down to where they want it to be, and unemployment, there's issues with the labor market right now. So it's just not going to happen, at least the first half of the year. Maybe the second half of the year, we'll see what happens. But any questions on this or anything else, or just want to see what your buying power is if you can purchase a home, please reach out to the Rebecca Foote Mortgage team. There's a link in our bio or somewhere around this video. Thanks.